Yeah, we were an early adopter of technologies to facilitate new business development. A lot of people are reliant upon their network and their relationships and referrals. And as we were starting out, didn't have as big a network as a lot of the entrenched competitors. So we spent a lot of money on technology, which is mainly data. And so we would spend a lot of money on pitch book data and other data sources that would give us a lot of knowledge about an industry sector, including research reports from bulge bracket investment banks, and then utilizing that data to maximize outreach process for our clients, and then also utilizing that data to reach out to CEOs to let them know who we are, what we do.
Hey guys, and welcome to the Grow IT Podcast. Your host here, Alessandro Cutri, joined today by Peter Formanek. We'll be diving into his story, a little bit about Young America Capital, and some interesting insights into what he's seeing inside the space. And so today's going to be an interesting episode. Definitely make sure to strap on and stick around to the end. Without further ado, I'll kind of just pass on over to you, Peter, if you don't mind just introducing yourself and telling the audience a little bit about your background and how you got to where you are today.
Okay, super. Nice to meet you. I'm the CEO and founding partner of Young America Capital. The website is yacapital.com. We are one of the largest investment banks in the United States for seed through Series B capital raises. We do a lot of other things too, but that's our primary revenue driver. And we've been successful in closing 40 transactions over the past 2 years, totaling $250 million of financings for our clients, which is almost two a month. So high volume of small to medium-sized capital raises, a few larger company sales and capital raises, and we also raise money for venture funds, private equity, real estate, and hedge funds. So we're excited about what we do. We're about 70 people right now. We've grown over 15 years from 0 to 70 people, and it has not always been a steady growth spurt, but we've managed to get to this level, which is a nice plateau for us at this point in time.
Yeah, that's awesome, man. And it's there's never, I don't think I've spoken to an entrepreneur that said it hasn't been an up. There's not the ups that comes with the downs, right? It's part of the game. But I'm curious to, just to rewind the clock back just a little bit. What was it that I guess, led you to, want to, start Young America Capital in the first place?
Wonderful. Yeah. So I had a phenomenal early career. I was a database administrator, COBOL programmer. I was a financial analyst down on Wall Street. And then I switched gears and I became a certified public accountant and became CFO of a private equity fund in Greenwich, Connecticut called Southern Cross Group. And while I was doing that, I helped them to raise $250 million of limited partner capital from some big institutional investors. And I got paid for that, but I didn't get paid as much as if I was an independent placement agent, broker-dealer. And so with their blessing, I went and started my own broker-dealer, and because that was not the industry they were in. And we've grown it over 15 years to 70 people. So I continue to own and run an ultra high net worth focused CPA firm as well. So we have a lot of knowledge of how very wealthy people invest and preserve and protect their assets. And we also have knowledge of how early stage companies grow and become successful and get subsequent rounds of funding and attract institutional investors to their cap table.
Yeah. And so you've obviously been inside the space now for quite a while. And so what are some of the trends that you're noticing that are happening right now within the market? Like what are some things that you're seeing just from either talking with different folks or just from, speaking with customers?
Yeah. So over the past year and a half, the funding market has become a lot more challenging for both companies and fund managers, venture fund managers. Private equity funds are continuing to raise a lot of money, but the venture fund community has struggled to find new limited partners. A lot of the limited partners, which are big institutional investors, are just re-upping with their top managers, and they're not speculating on emerging managers or less well-known managers. So there's been, and same thing with because the venture funds are not getting as much capital. Been a down rounds and compression of value on a lot of the underlying portfolio companies of the venture funds, and so there's been a tremendous demand for our service to help them to access investors outside of their world and tap into the family office communities that make direct investments into companies, as well as to venture funds, private equity funds, corporate development executives at Fortune 1000 companies that are looking to make direct investments as toeholds to make future acquisitions. So we've been seeing a lot of compression of valuations and
Mhm.
CEOs struggling to deal with their next round of funding if they're burning through cash. That's probably the
Yeah.
primary
Well,
problem in the.
obviously, there's probably a couple of things there, but what do you feel like? I mean, in your opinion, what do you feel like might be causing that? Like, what are you seeing that's maybe the root cause of that? I'm sure there's multiple factors, right?
Yeah, I think the institutional investors are when interest rates went up,
Hmm.
uh, it it gave people an alternative to making more speculative investments, because if I can, and we do advise a lot of very wealthy families, if they can get a 4 to 5 or 6% rate of return on a fixed income investment, including U.S. Treasuries, they think much harder about making a more speculative investment that's going to yield them 12 to 18% if it works out, but could be riskier. So the
Hmm.
increase in interest rates has been the primary driver of the decrease in the valuations of earlier stage companies, in my opinion.
Mm. Well, and it's interesting, right? You've been a part of, at this point, you said 40 transactions in the past 2 years, which is definitely no small feat. What would you say, for I guess is like your guys' unique value proposition that you bring to the table, where you're able to, close a lot on these deals and people are finding the value in.
Yeah, what we were fortunate to do was build sector-focused teams as we got bigger, and then have a sector head. So we have a sector head for every major industry sector, and that sector head and his team have a lot of experience relevant to that particular industry. So if you're talking about a consumer products company or an industrial manufacturing company, we have
Mhm.
experts that are inch 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 wide, mile deep on their level of expertise in those industry sectors. So it gives the CEOs confidence that we can get the job done, and plus the fact that we're producing a high volume of results for other clients. So our size and
Mhm.
our sector focus strategy has really paid off for ourselves and for our clients.
Yeah, and I think that's such an important, part of, companies that I was just speaking to someone who, was just talking around how important it is to have that vertical focus, right? And to have experts within your companies that know those certain industries that are able to speak to them, that really have the expertise, because that's ultimately what's going to build that trust with folks as well. When you know those space, you've done transactions in them before, right? It's not like it's your first rodeo when it comes to that.
Absolutely.
Yeah. And so I did want to segue just a little bit now, Peter, into, obviously because, you've built this company from 0 to 70 employees, right? And so there's obviously a lot of, new relationships, business development, meeting the right people, shaking hands, kissing babies, we'll call it, right? But I guess for someone that's tuning in and they're looking for advice in terms of how to, what they should do to start growing their firm, right? In terms of what are some of the things that I should do? What helped you on, like, early on within the business to start building that book of business and start getting your guys' name out there?
Yeah, we were an early adopter of technologies to facilitate new business development. A lot of people are reliant upon their network and their relationships and referrals. And as we were starting out, didn't have as big a network as a lot of the entrenched competitors. So we spent a lot of money on technology, which is mainly data. And so
Hmm.
we would spend a lot of money on pitch book data and other data sources that would give us a lot of knowledge about an industry sector, including research reports from bulge
Hmm.
bracket investment banks, and then utilizing that data to maximize the outreach process for our clients, and then also utilizing that data to reach out to CEOs to let them know who we are, what we do, and open up dialogues and get them to become clients of Young America Capital. And that has paid off because we've gotten, as we got bigger, we had a bigger budget to spend more money on data. And
Yeah.
then we became more sophisticated because we're a frequent user. We became more sophisticated in the utilization of the data, the management of the data, the dissemination of the data to the 70 bankers as well as to our clients to show them that we have the data that will help them be successful. So I would say our unique selling proposition has been an aggressive employment of technology to facilitate the growth of our company and the success of our clients and their efforts to raise capital.
Yeah, and that's really valuable stuff right there because I always say it's almost like data is today's gold, right? Data is so important, especially when you're trying to find the right deals, trying to find the right investors, and being able to marry the two together. And it's obviously there's only so much growth that can happen even from your referrals in your network, right? That is obviously a limited, obviously a great channel, right? You should be able to leverage to be able to bring in new business through that channel itself, but it's not as predictable, right? There's obviously pros and cons of that, so it's important to start building other channels beside that can get in front of the right people, right? That are able to promote you guys essentially. And so I'm glad that you did bring that up because I think that's an important part because a lot of times people are starting businesses and maybe they don't have a network, right? They don't have a referrals that they can lean upon. So they have to go out there and, as some say, pound the pavement, but build those relationships, right? Be able to to
Right.
to, to accelerate
And
that
we do
growth.
we also spend a lot of money. We reimburse all of our team for any of their attendance at events, networking events, industry
Hmm.
events, trade shows, conferences. So we're aggressively pushing our team to go out there and press the flesh with people at events so that there's a one-on-one relationship that's built to help them build their own network of referrals and friends in the industry. So we're aggressive on that basis as well, in addition to our technology and data focus.
Definitely. Yeah, and it's one of the most important parts of the business, right? Is those relationships at the end of the day, right? Because that's what has repeat customers. It's what has longer client retention. So it all comes with that, right? In that relationship that you are building. Um, what advice would you be able to give to other founders or CEOs that are looking to start companies or that are maybe early on in their entrepreneur career that's served you well throughout your career?
Yeah. So getting a group of trusted advisors that is going to help, that have a vested interest in helping you to be successful and to evaluate and mitigate risks that will hurt your growth plan and process is probably the most valuable thing you can do as a startup, is to make sure that you have a diverse set of intelligent people giving you advice and acting as a sounding board so that you're not driving the bus in the fog. You actually have a good team that's making sure that you are focused on the mission and continuing to stay on the road and not drive off into the forest. So I would say that's very important. A lot of CEOs of tech of startups think they know a lot and
Mhm.
are very headstrong and don't listen to as much advice as they should. Now, if you're passionate about your vision and you want to pursue that, that's great. But have a sounding board of people that who respect you and want your best interest, have your best interests at heart, to make sure that you bounce things off of trusted advisors. I think that's really crucial for startups. And then validating your business model and your technology moat is very important too. Having patent attorneys and other accounting and legal professionals that are helping you to build a strong foundation to your business is very crucial too, because some people
Yeah.
build a business and they have no intellectual property protection or no moat, and they're just going to be commoditized, and they're going to struggle to be successful.
Yeah, no, that's a great point. I think you bring up a couple of really great points, right? First of all, having those advisors in your corner is I think, crucial, right? Because at the end of the day, I like to think, I mean, I always leaned upon one of my business mentors that to help me, early on in the business as well. And then also, you can't do things by yourself, right? You're not typically, unless you're the 1% of your Elon Musk or your even of that sort of level, right, of echelon when it comes to entrepreneur. You have to lean upon different advisors and different people to put you in the right direction. I often use the analogy of if you see if you watch boxing or if you watch MMA, right, there's all these coaches, right, that come in and these train these fighters, right, because as good as the fighter may be, right, as good as the talent and the things that they have that they possess, they still need that guidance from their coach to be able to put them in the right direction, give them the right strategy, give them the right game plan. So I love that, and I think it's great advice, and I'm curious to hear from you, like, what are some good ways to find those advisors? Because that's also kind of hard too for people. It's like, how do I go out and do I go pay for like someone to help me, or should I go meet people? What should I do in that sense?
Usually, if you've been moderately to highly successful in the early stages of your career, you're going to have some mentors that were either bosses or senior executives that showed an interest in having a relationship with you, and those are the most. And then they left and went to another firm, or you left and went to another firm. It's important to keep those relationships and
Yeah.
to nurture those dialogues over time, so that you have a group of people you can bounce ideas off of. So I would
Yeah.
say that's really university connections, whether you're undergraduate or graduate school, industry connections at trade shows. If you make if there are speakers at a trade show and you're really impressed by one or more of the speakers on a topic that you're passionate about, going up after they finish their speech and introducing them, giving your card, and trying to create a relationship where it would be mutually beneficial, and certainly offering people compensation, whether it be
Mhm.
stock or cash, to the extent you're able to do so, is a very wise move to endear them to your team and to your mission of growing your business. So don't be cheap about paying people
Yeah.
for their advice. Make sure that they feel they're motivated. And a lot of people say, listen, I don't need it now, but if there's an interesting opportunity, make sure I'm involved and I'm invited to the party when there's perhaps a favorable financing round I can invest in, or you need my advice and you want me to be on either a board or an advisory
Mhm.
board and compensate me once you formalize your board structure or your advisory board structure. I think those are easy ways to entice people to watch out for your vested interests and coach you along the way as you grow your company.
Definitely, man. And I gotta ask you, right? Because I'm curious. I hear all the passion. I hear, obviously, a lot of things that you're doing here and what you guys are building. And as you're continuing to grow, what is it that you, I guess, enjoy most about what you do, right? In building this business and in the space that you're in.
Yeah, so going back to what my one of my first jobs was as a database administrator, I love data. And so I my one of my first jobs was accessing a mainframe and
Hmm.
pulling, terabytes of data down and putting it into a PC and manipulating it and creating custom reports. And I continue to do that, a modified version of that initial task I learned a long time ago
Yeah.
for our registered reps, the investment bankers, as well as for our clients. So we're constantly uh, coming up with new ways to access data and utilize the data. And it really is fun for me. It's like a jigsaw puzzle or a Wordle, or I, I,
Yeah.
I, I find it intellectually stimulating. It just turns me on, and
Yeah.
and I'm good at it, and it benefits me and all my team and our clients too. So that's,
Yeah.
and I like the chasing, hunting down clients and negotiating contracts and helping them negotiate contracts with investors.
Yeah.
I've
Yeah.
had a lot. I was a CFO of a private equity fund. I've been CEO of a tech startup that ramped to $30 million. So I've always been challenged by the hunt of the process, whether it be a capital raise or growing a company or selling a company, and
Yeah.
it's intellectually stimulating for me. So I enjoy what I do.
I I can relate. There's something about the game that just you just love to play it, right? The challenge and being in it and being the thick of it. I think that that is the most enjoyable part of it, right? It's almost like you become addicted to the stress, right? You become addicted to the to the game
Yeah,
of it
but
all, right?
like
And
I'm always trying to create new opportunities that we can diversify into as well. So, for example, about 6 years, I was spending a lot of time in the Caribbean for some
mhm.
Caribbean investments I had done, and I ended up building up a Caribbean investment banking team. We're the only people that have an organized Caribbean investment banking team
Wow.
that's actively trying to raise capital for companies and run company sales. We do buy side work for some of the largest companies in the Caribbean. We have a big internship program where we have college and university interns. I've grown that to be a sizable operation. And then the most important thing, once you get it to a point where you think it's a viable business model or strategy, is to layer in management to take over and grow that in a more organized fashion and focus on that rather than me continuing to do everything. So my philosophy as we got bigger was I'm going to help with new business initiatives. And then as soon as I feel like it's at a point where I can hand it off, I'm going to hand it off to uh, some of our team and let them continue to run and grow with it. And I will certainly be part of the process, but don't try to micromanage and get involved in every
Yeah.
aspect of your business because then you'll never grow rapidly because you're going to be too focused on micromanaging. So build and then delegate is one of the things that I try to do as rapidly as possible.
Yeah, and I think that's so important, right? I think like almost having the ability to know when to step out. That's a hard part too for a lot of entrepreneurs and founders is knowing when to let the reins loose and be able to let the team manage. And it's about finding those good people who are able to manage themselves, right? And especially the management team, right? You gotta dial in the killers, right? To make sure that they're driving the business forward just as you were, right? And so totally agree with that, man. And it's been a fascinating conversation, getting the chance to pick your brain a little bit, see what you guys are doing with Young American Capital. This definitely sounds like something very interesting, and I can, like I said earlier, I can feel the passion, and I love what you guys are building. If people are listening to this, man, and they're like, hey, like, how do we reach out to you? How do we get in contact with you? What are some best ways to go about and do that?
Yeah, so email is really the best way. Peter at yacapital.com is the best way. I would encourage you to look at our website before you email so you can ask smart questions and make our first intro Zoom call as meaningful as possible. We are very eager to help people, even if it's not a fit for what we do. We give a lot of free advice and we try to coach people. I view myself as a life coach for our clients for that period of time that we're interacting with them and trying to help mentor them and help them employ best practices in when they're communicating with investors and so email is the best. You can call our main office number is 914-777-0100. You could even call my cell phone if those two avenues don't work, 914-672-3779. Love to help you. You could reach out to me on LinkedIn as well. We look forward to meeting as many people as we can.
Perfect. Well, I'll make sure to include those links and the contact information inside the description for people to go and check out. If you did make it all the way to the end, make sure to like, comment, and subscribe, and go check out Peter and the team and what they're doing. Thanks again, Peter. It's been an absolute pleasure having you on the show, my friend.
Thank you so much. Great to be here.